12:24 p.m., 6/14/2001, we had overnight news that came out of China that it doesn't look like there would be a hard landing according to them, and that they're trying to slow their economy down. But the headline news was driven for today's upside rally from an oversold market, with an options monthly expiration and today being Tuesday now, day 2, knowing that there was going to be one of 5 days that this would be, and that short-term oversold markets get lots of buying action, as we see again. The S&P 100 large cap is where they can put money. It's got the best technicals out there, dividend yields around the world. They pay out good. They underperform the broader move. This is where big money looks to go, outside of lots of other ones. So when we take a look at the S&P 500, which we'll go right through here, you got broad-based buying, a lot of short covering, okay? And we could just go right down of all 500 companies, and I got a slew of green once again. But then there's been days within the correction that you had slew of red, same way. S&P 400 mid-cap, once again, same thing across the board. You've got complete buys here. It's on record Tuesday on June 14th at 12:25 p.m. And that it's broad-based short covering. It's broad-based short-term oversold markets that get these relief rallies. But because of the longer-term correction that we've had for 6 weeks in a row, since we called the top of the market, we're going to get days like this. We have plenty of days like this. This is why we record these with our students, so that the students can understand what the S&P small cap is and where broad-based buying is here, and how it all got started. Okay, and a lot of the futures are making these prices go higher. A lot of the bears are taking profits when it stopped working, and they got the headline out of China this morning. That's what that's all about. One of the other key indexes is that gold and silver trade. All green, but then again, my friends, MMTs you are, is that you've seen where they're all red too. And it's all part of what we call price volatility, from a top reversal down toward a short-term bottom, oversold bounces, and headline events during a monthly options expiration. You're going to get it. Look at this here. Here, the CRX, again, look. All green. Broad-based. Here are the same culprits. There are some good names in here. Hess is one of them. Goldcorp is a good one. FCX, the leader in copper, because the Chinese, well, if they don't have a hard landing, well, they're going to be consuming copper, okay? That's why that copper trade could be setting up real nice. How long it actually holds mentally with these people is yet to be determined, because we don't know. The natural gas trade right here is totally up across the board again. So every time they get a little bit of good news and you get to oversold areas, you got some money coming in, but you got to remember that there's a lot of electronic short covering, and it's not done by humans. It's all done electronically, and it's done with using the futures market and buying. There's some natural buying in here as well. People put money to work again, but the broader part of the tape, it's not. Here in Deutsche Bank Energy, again, some leaderships in here. EOG being one that we like. Nice bounce. We had some good trades on it. Once again, you got Halliburton in here. You got BHI in here. You got ConocoPhillips in here. You got Sun, SUN in here. Nice little trading stock. Okay. Oil services, on the other hand, well, you got a slew of percent gains across the board here. So the bulls are totally in control. Here we go. We've got Baker Hughes in here. Diamond Offshore in here, Riggs Transocean in here, Weatherford Energy in here, broad-based. Here's the most gimmick one of all, the financials on the key BW banking, BKX.X. So they're coming in here. I wouldn't be buying anything in the banking index if you paid me to. Even if you wanted to buy it for me free, I don't want to own it. They got a lot of problems forward looking. S&P banking right here, they're buying. Security broker dealers like Goldman and JP Morgan. JP Morgan has a good multiple. So does Goldman in some ways, but it's got too much headline risk. You hear me? You got Raymond James in here. Got Goldman in here. Okay. Goldman is being the leader. It's up 2.41 on the range. Agriculture stocks, fertilizer, good thing to understand. A little bit of buying in here in the ag stocks. Okay. Restaurant stocks, again, You'll probably see some broad-based buying in here with some of the short-term oversold conditions that get bounces in markets. They just don't go one way. In the healthcare, which has really been this Morgan Stanley healthcare thing has been outperforming during the last several weeks. That's been here, and they continue to buy here. Okay, leisure entertainment. You get into the casinos. Win is always a good one to trade. Today's range 2.41 ratio. But once again, broad-based, as you see. Cyclicals. Nice move into cyclicals. Short covering. Short-term oversold. Consumer-based type stocks over here. All buying. Nice. Morgan Stanley retail. Well, they had a lot of news that came out of there. Best Buy earnings, in my view, stunk. Then you had the JCPenney news where second in command at Apple has left to go to JCPenney's. He's no longer with Apple. That's why you got a 16.97% net change gain. And then because of those two things, and along with the broader market, is people think that the consumer might be okay because food might come down and gasoline might come down. Semiconductors that are weak this time of year, that are short-term oversold, are getting another round of bounces across the board. The semiconductor, the Philly Semiconductor Index, getting a great move off the bottoms across the board. Once again, these are seasonally the time of year where they're very weak. I would be selling into the moves until we get into the earnings season. Semiconductor capital equipment, we can see across the board. Once again, some of them are in, they do some of the same things. Semiconductor devices, though, that's Microchip, that's Marvel, that's Maximum here, that's NVIDIA here, that's the leader, Qualcomm, which has held up really good in the last 6-week reversal that Qualcomm has. There's a lot about that trade moving forward. The CBOE technology, across the board, technology this time of year is weak. I would be selling into the moves. Some are short-term oversold, but I wouldn't get in love with them this time of year. We got broad-based, though. You can see it's all ticking on one cylinder. That's called volatility, computer technology. Let us not forget the XCI.X and computer technology. There's your Cisco's in here, Microsoft's, and IBM's is the leader here that we like. This is the one we like, okay, out of all of them, okay. SanDisk is a seasonal play. A lot of these things that are in here are seasonality, okay, and we're going into earnings season, but we remain good on IBM. The Dow Transportations, clear across the board. That's what helps fuel rallies. You need these to be participating. If oil and gasoline is going to come down, all of this stuff is up in the air. It doesn't matter. You got a lot of short covering. You got some people putting money to work because of short-term oversold conditions. The NASDAQ transportation, which is quite huge across the board, we got some pretty good buying. Short-term oversold. Telecommunications, we always like to look at these. We can see on the NASDAQ telecom sector, we got a good slew of green across the board. There's some leaders in here. Okay, and they too have seasonalities with the consumer behavior and buying. This is the North American telecoms. Okay, and we can see here Verizon is in here. You got T-Mobile, got Motorola. Okay, that's what these are about. Okay, and a little bit of buying there, but not anything big. One of the things that I will focus on is this natural gas trade. It too is up in the air. If they do the right thing, there are some leaders in here. APA is good. EOG. A lot of these stocks are short-term oversold, and they're going to bounce. It's not like them when they were at their highs and we were shorting them. Okay, so we pretty much covered our walk around Wall Street. One thing that I will take one last look at is that real estate. And in the Morgan Stanley, the Dow Jones REITs, these are REITs. They've been buying and sneaking in here the last couple of days as a contrarian thing, that they can get a good yield on some of these names, that everything is hunky-dory. I don't agree with it, but it doesn't matter. That money is across the board here in the Dow Jones REITs. They've been going in there. Let's take a look at your beaten down housing sector. Even they're catching a bid. like housing is put in a bottom. Give me a break. It doesn't matter. It's all about how the bear responds. It's what created the gap. We've been sold down. We're short-term oversold. You got a huge options expiration. The call side is totally deflated, and the put side is totally inflated. It's just the opposite. Before, it used to be the calls were that way when we called the top 6 weeks ago. And the puts were deflated, and buying them across the board paid. And once again, when you start seeing, I call it dumb money going in here. And there's no way that I'm going to buy something and put in a portfolio here, because we're not at a bottom yet. It doesn't matter. What matters is how the bears cover and how people go bargain hunting. On Dow Jones index components, when you take a look at the Dow Jones industrial averages, that's these stocks here. Alcoa's in here, Hewlett Packard, IBM. JP Morgan. JP Morgan, a nice little trade. It's cheap for big money. McDonald's in here, we like it. It's been range bound. You got Merck in here, okay? ExxonMobil in here, okay? Caterpillar's in here, okay? And they're all moving again. And it's important to know that. The actual Dow Jones composite itself, the DJC here, that's your dirty 30 now. You got some broad-based buying across here. And some of these stocks do well. And even some of them that are in here are also in the S&P 100 now. Okay? And that's a contributing factor to this buy side. Okay? Short-term, oversold, headline event, options monthly volatility, headline events out of China, everybody buying into that, but the downtrend has not been broke. And it's going to take a lot more of this, MMTs, to break this downtrend of the broader markets. It's going to take not just the sector's going to be able to pull it out. You're going to have several weeks of buying to take the 6 weeks of selling that this market has not seen since 2002. Not only that, MMTs, we called that market top at the end of April, correction around the corner. We got the pages, we got the live analysis before it was all going to happen. Now, this is how it happens at bottoms. This is how it happens in short-term oversold markets. And it's important to identify these MMTs because the identifier is that you're going to have days like this. And it's usually going to be tied to a major event. A monthly options expiration is, like I said, during this 5-day period, a lot of it might not make sense. But I also said it would be headline driven. Okay? And headline driven events during oversold pullbacks that are oversold, are going to get these bounces like this. That's why I said early on in the week and last week, the bear has to be careful on days like this. They don't know when to be flat. Well, this is where you get this broad-based buying across the board. It just because everything that's been going down for 6 weeks is people have to buy to cover to take profits. And then you got people chasing the move. All aboard. The train has left the station. Well, we have clearly seen that every one of these have failed since that 6-week reversal has been in play. MMT.